All right, what's good? What's good? What's good, YouTube? Hope you guys are doing amazing. Super excited to be back with y'all for another week as we are wrapping up 2025 in the next month and a half. Pretty crazy to think about, man. But I see you guys here on YouTube in the chats. Appreciate you guys for tapping in on a Sunday evening. Obviously, if it's like overseas, you guys are probably really late at night. So again, appreciate y'all for being here, man. And yeah, let's get straight into it. We got Chris, we got Melvin, Jamie, Tony. What's up? Melvin, Liberty X, your greatest creation yet. Appreciate you, man. Super excited to be talking about Liberty X actually a lot more. As we, head into 2026, that's gonna be definitely like the one and only main focus for sure. It's been going really well. So yeah, let's dive straight into it, guys. Don't want to waste any time. If you guys have questions or anything in the chat box while we do this live, obviously more than free to interact on there. And yeah, for those who are newer, I do these Sunday market outlooks pretty much weekly as long as I'm not traveling or doing anything. And we kind of just get prepped for the week as far as what moves we're seeing, what's been like, the last couple of trades we've taken, where we're kind of at in price action overall right now. We'll go over some of the fundamentals as far as any high impact news that we have coming up. We're kind of stepping out of the government shutdown era that we've been in for about the last almost 2 months, which is the longest government shutdown we've kind of seen ever in US history. So, that's going to definitely influence some things. This week we do have FOMC on Wednesday. So first couple days of the week, we'll see how much movement we really get, but for sure the catalyst for the next big moves, it's always going to be FOMC when we are trading in that specific week. And yeah, later on we do have some more high impact news like unemployment claims, PMI, and all that stuff to finish the week off. But FOMC should definitely be the most impactful thing we see. Scanner, no, it's not a scanner yet. I say yet because obviously at some point it will be cool to introduce that into Akashex. Most of you guys are in Akashex or are aware of what that is, which is our educational platform where I do my actual live trading, send alerts, and teach my strategy in depth. But Liberty X is just basically a new strategy, if you want to call it that, where I've kind of been telling people over the last couple of weeks, maybe a month, or maybe like a month or heading into month 2 of me talking about just having something that I would consider to be my A+ setup. Obviously, I've been teaching Liberty for the last almost 2 years, utilizing Asia as a big catalyst for us to find, our trades. But again, I wanted to kind of have something where we could refine it and find, again, an A+ setup, regardless if we're in an uptrend, downtrend, or consolidation, whether we have government shutdowns or not. This is something that if all the confirmations line up, it's very, very powerful. And again, I mean, the results really speak for themselves. I can say all that stuff all I want, but ultimately we got to see how it actually plays out. And yeah, I mean, last week we definitely saw it play out in a big way. If I get into our funded trader chat, I actually posted all of these screenshots of basically all the setups we saw from Friday, Thursday, Wednesday, Tuesday, and even Monday. Monday was the one where we actually started the week with a loss. And then pretty much from there, we've just literally hit TP after TP after TP after TP, following the exact same framework, the exact same entry criteria, confirmation list, all of that. So again, we want to kind of double down on that and focus on that. Obviously, a lot of my OG students who have been with me for a while, doesn't take away from everything we've done so far. Or, I've seen some people still take trades based off of what we usually have done in the past and doing well. But again, this is just something that kind of, again, gives us that clear A+ setup. And I think it's going to help create even more testimonials and just clarity for everybody's trading. So again, I'm going to cover basically all of last week's trades a little bit as well, just to kind of, recap the strategy and again, you know, kind of get into what we could do heading into this week with it. So let's get into it. So we're gonna start off with fundamentals and just get that out of the way. Again, really quickly, we do have FOMC on 2 p.m. Eastern time Wednesday, and then unemployment claims and PMI the next 2 days. So again, like the rest of the week starting from Wednesday, so midweek to end of the week is where we'll probably see the most incentive for volatility to step in. Monday, Tuesday, you know, it can be volatile. You never know, but we don't really have any high impact news to steer that. So I wouldn't be surprised if Monday and Tuesday were slower, and then once Wednesday rolls around, we kind of pick things up. So pretty quick, pretty simple when it comes to that. Obviously, we do have to keep an eye on Trump at all times with whatever, you know, meetings he's doing with international leaders as far as the China tariff situation. And then again, the government shutdown. Those are the two events that are not really our scheduled financial news events, but they do serve as catalysts to bring in spiking into the markets and all crazy stuff. So you always got to keep an eye on Trump and what he's got going on with speeches, announcements, tweets, all of that. All right, so yeah, again, fundamentals pretty easy. Now, let's just kind of go over Monday through Friday really fast, and that'll kind of give us the narrative of where we're at now and what to expect heading forward. Okay, because the reason why I'm able to also, aside from having, you know, a specific system for entries and all that to be on point, is to trade one asset class during one session with one strategy over and over and over. And so I'm always following the narrative of what's happening with NASDAQ because it's the only thing I really trade from a day trading perspective. So I never feel like I'm lost or I forget where we're at in price just because it's like the main focus of my trading. So when you jump, you know, pair to pair, asset class to asset class, and you have a really big watch list, it could be a little bit harder to kind of, you know, see where you're at. You'd have to always kind of go back and do a higher time frame analysis just to make sure you don't forget where you're at in price. But again, for the most part, because we're hyper focused on this, we kind of know where we're at overall. So yeah, let's start with Monday and then progress through the week. And then we'll see how we got here where we're at right now, right? Okay, so we're gonna bring it back to Monday. This is Wednesday, Tuesday, Monday. All right. So number one, we're gonna pull up the checklist of what we look for. So let me pull up this template here. And this is basically the confirmations for the strategy. We're gonna be looking for how the 6 a.m. 4-hour candle forms, whether it's a bullish or bearish candle. We're going to focus on what Asian range did, which direction we're breaking out of, and then looking at the VWAP, which is the volume weighted average price, basically the squiggly line that looks like an EMA. And then basically we want to align our entries with that higher time frame direction and all the other confirmations before we actually jump into a trade. So if we bring this back on Monday, we're gonna look at 10:15, let's say. Okay. Now, on this day, we see that we had Asia form, which is this gray box here. Okay. And we're gonna mark off the high of Asia right here. Okay. And so from the get-go, we already see our confirmations basically lined up. We have the 6 a.m. candle, which is this candle right here. Okay. That basically represents what happened from 6 a.m. to 10 a.m. So 6 a.m. started over here, right here, all the way up until 10 a.m. And so basically we saw price open up at 6 a.m. We basically flew to the upside and then the candle closed. which is how we form this 4-hour candle from 6 to 10 a.m. And I'm talking 6 to 10 a.m. on Eastern time, of course. Now, once 10 a.m. rolls around, we want to kind of roll with that momentum. Okay, so that's number one. This candle really decides my directional bias for the next 4 hours from 10 to 2, which is the bulk of New York session anyways, which is why I focus on it so much. So 4-hour candle, bullish. Second thing, we have Asia. This is the high of Asia, and we saw that price has sat around at that point, you know, heading into London session. Then we finally broke out, respected it, and continued higher. So that is the second thing that shows me we're bullish. The third thing is looking at the VWAP, right? And we see that the VWAP has been, you know, just kind of coasting and smoothly pushing up. All of this shows that price has continued to rally higher. So all the confirmations are on our side for us to focus on continuations to the upside for buys. Now, all I want to see at that point to basically execute the actual entry is I want price heading into this 10 a.m. candle to go against our analysis and then realign with our analysis, right? So once 10 a.m. rolls around, we'll mark off the open price right here. This is the 10 a.m. candle open price. It's a little bit higher. Right there. Okay, so 10 a.m. opens. And I think I had jumped the gun a little bit on an entry. Price did drop a little bit, and then it kind of came back up. And so I think I ended up going for buys a little bit preemptively, unfortunately. And I believe we hit stop like this. Yeah, so we hit stop. Okay. The reason why I got in was I think it was this specific candle right here. So it's always a little bit tricky to like perfectly time it every single day, which is why I tell people, you know, you got to give yourself a risk where you can at least get 2 shots at it in a day, whether it's like 2 different positions, you know. But if you have just a really high risk that you're using and then you can't get in again if you take a stop loss, you're gonna kind of miss out on some things. So I let it, you know, kind of push against us first with this move right here. And then once price ended up breaking and closing back above right here, I was like, okay, cool. Price, you know, spiked up, dropped below price, and now we corrected. And yeah, went for the buys at that point. And as we saw, we ended up not really being ready yet for that move. So, you know, at this point, a lot of people would probably see that and be like, oh, you know, the clear move is we should now be selling. You know, price is coming back down aggressively. We're going to end up doing this. And if that happens, hey, you take a loss. It is what it is. But most of the times, if this candle is bullish, we're above Asia, we're above the VWAP, you're going to have a high win rate with following that direction. And that's all that matters. If we can win even 50 to 60% of the time, for me, it's enough to be profitable. If we can get that into the 70s, 80s, then we're going to crush it that week. And that can fluctuate, but for the most part, again, we're going to see how things played out during the week. Hey, Rich, add me to the channel, please. I'm an Akashics member. Are you referring to the funded group chat, like this one? If you can let me know if this is what you mean. Because we have the Akashics official chat, which is the one that we have all of the different educators within the platforms, like subsections. And then I have the like the funded chat that we created coming out of the boot camp that we did in October. I need to know which one you're referring to. Because if it's the Akashics official one, you have to go through the Telegram bot that scans your membership and then it lets you in. If it's the funded trader chat, you can message me on Telegram and I can add you manually to that one. So my Telegram for me is at, did I already change it? I think I did change it. Yeah, okay. So my Telegram is at Rich Vendiga, like this. So if it's the funded chat, you can just add me on Telegram, shoot me a message, I'll put you in there. If it's the Akashics official one, then you gotta let me know because that's gonna be through the Telegram bot, and I'll walk you through how that goes too. Okay. So like I was saying, most times this is gonna work in our favor. And if it doesn't, then whatever, you gotta take a L. Now, just because initially it doesn't go in our favor doesn't mean anything, because until we really pass that 2 p.m. window, it's not over yet to end up taking a trade, right? So yeah, if we look at 10 a.m. to 2, you're talking about from basically this point all the way to this point right here, right? From 10 a.m. to 14 o'clock, which is 2 p.m. If we can get price at this point to break back above the open price, then we have all the confirmations lined up again, and we can then go for it again a second time. If it doesn't do that, then there's just no trade to take with this specific strategy, and either you have to rely on different models that you're trading, or just take no trade if this is the only thing you're going to trade. Like the only strategy or method of entry that you're going to take, you got to wait for the confirmations to align, or don't take a trade. So we fast forward a little bit, price ends up respecting Asia high and kind of floating its way back up, and we see price start to cross back above 10 a.m. open price. So at that point, we can go for longs. 50-point stop in most situations is what I will kind of opt in for. And yeah, if we can target even, I would say like double our risk is really like the main priority. And then anything past that, we want to try to squeeze as much as we can out of the move. But if we can hit 2% or 2-to-1 risk to reward, I don't want to really give back anything more than that. I do want to let it keep running as much as possible, but I definitely want to, at minimum, not let the market reverse on us and try to secure that 2-to-1 as much as possible, just to make the math in our trading work ultimately. Okay, so price starts crossing and we start to move into profit, and things are going good. At this point, we're heading towards, this is like 3:20 p.m. and then we hit 2-to-1 risk to reward ratio here at about almost 4 p.m. Market closes here at 5. So at this point, price still rising a bit. And then here is where market closes. So it depends how much you want it to move. Really, I like to be out by market closure right here. This ends up swinging and continuing heading into the next trading day. But personally, I would say just take that 2% win right there. Even if it was a little bit below like a 1.7, 1.8 R, and just get out before market closure. I mean, some of you guys are trading in a like maybe futures or something, you have to exit anyways. I think some people ended up holding this position for the next day if you're trading like CFDs or whatever. But for me, this is a successful trade all in all. So even with the L earlier in the day, over here, you can make that L back at a 1-to-1 and then basically end the day with a +1 R when it was all said and done. So that was Monday. Okay, now we're gonna fast forward through Tuesday. Check the chat here real quick as well. Oh yeah, Ariel, about the PDF in Spanish. Thank you for reminding me. Honestly, if people don't tell me that stuff sometimes, like, it could go over my head to make it. So I definitely want to put that out heading into tomorrow. So I would say maybe tonight, but for sure by tomorrow, I'll have everything in Spanish for sure. Thank you for reminding me on that. I gotta write that down. I'll write that down right now. Hold on. All right. I had to jot that down because. Okay, so let's look at Tuesday. I have to make this a little small. All right, so we're on Tuesday now. We're gonna replay this back to 10 a.m. Okay. All right. So we got 10 a.m. rolling around, and we saw. Make sure this is right. 5. Ooh, not bad. Hold on. Okay. Okay, so let me mark off 10 a.m. open here. So 10 a.m. opens right here, right there. So let's look at the confirmations again here. Okay, so we have 6 a.m. candle from 6 to 10 a.m. We had a bullish candle. Now, it wasn't a very strong bullish candle, granted, but it still ended up as a bullish candle. So what we want to do is only focus on buying from 10 to 2 to continue the momentum of that 10 to 2 candle. Now, initially, we see a huge drop off right away below 10 a.m. So, at first, there's no trade, and again, there's people that are going to get FOMO and be like, man, I should have sold, etc., etc. As long as we follow the confirmations, this is going to be fine in the long run. So we have a 4-hour bullish candle. Again, not the strongest of 4-hour candles, but it's still bullish ultimately. So for us to get a trade here, we need to now see price cross above Asia, cross above the VWAP, and also cross back above the 10 a.m. open price. Right now, everything is against that, the way you see price right now. Price is below Asia, below the VWAP, and below 10 a.m. price. So we would need price to cross above 10 a.m., cross above a VWAP, and then also cross above Asia to get all the confirmations in line for us to get into a trade. Until then, we don't really have a trade at all. So we let price kind of continue to play out, and we start to see price kind of setting up here. Now, personally, for me, again, the way you follow the confirmations to the T is for us to wait for Asia to cross, right, as one of the confirmations. I personally didn't wait for Asia to cross on this one just because I wanted to take a chance on it to get a better entry, where if price crosses above entry on Asia, that's our final confirmation right here on this situation. However, you don't know if once we cross Asia, if we'll actually pull back to that 10 a.m. price. So if you don't take it here, you're going to have to probably take it at the Asia cross. And now your entry is not as good, which means your stop loss is going to be higher, like maybe up here, right? And price, may just like fly and you don't even have the chance to get in and you end up missing the trade. So I took the chance to enter as soon as we crossed 10 a.m. simply because we were at least over the VWAP. We took liquidity of this low right here. Like, here you go. So we took liquidity of this low, and that was kind of like a little sweep that shifted the market. So we see price sweep that low, and then we started shifting structure above this high point right here, and then we started crossing above 10 a.m. So for me, if I see a liquidity sweep, a shift of structure, we're above the VWAP, and we're crossing 10 a.m. price, like I felt like I had enough already for me to not just need that last confirmation to get into the trade. But again, for the sake of following the rules, following a strategy to the T, you gotta wait for Asia to cross, okay? Now, the funny thing is, in this situation, it actually crosses Asia and does retest the 10 a.m. open price. So in reality, you could have actually followed the rules perfectly and you would have been fine in this specific situation. But I'm just being transparent about how I executed, and I personally didn't wait for that last confirmation of Asia in this situation simply because of all the other stuff in my favor. Again, seeing liquidity get grabbed, shifting above these highs, and then crossing above 10 a.m. and the VWAP. For me, those 4 things were very strong as it was for me to wait on one more confirmation. Get me? So that's just how it played out. So yeah, basically price crosses here, we execute, and like I said, we end up crossing Asia here. then price retest price there. So you can see we do come back. That's why I say you could have actually waited for that, but you never know. The market doesn't have to necessarily give us that pullback. Um, and yeah, basically from there, 1-to-1, we want to go at least for a 2-to-1. Now, something I've always taught when it comes to my my system of understanding Nasdaq and the importance of session-based liquidity is when you have Asia, right? You have Asia right here. If we took the low and price is crossing, back above, there's a good chance it wants to grab the liquidity of high, right? So if that's the case, then that's a really good target to consider, holding a position to and exiting from. So to give you an idea, a 3-to-1 basically is once we're crossing Asia high, we can bag a 3-to-1 risk to reward trade. At a minimum, we want to try to secure a 2-to-1, at least, right? So whatever, price comes up. And something also important to note here, okay? This was on Veterans Day, okay? So because it was a holiday, price kind of ended up stalling out later in the session. You can see like towards the afternoon time, price really crunched up here and there was just no volume to really continue the move. So there was enough early in the session to catch like this drop, for example. But once we got later into the day, this thing kind of ran out of steam. Personally, for me in this trade, I ended up closing at a 1R once price kept chopping like this, only because it was a holiday. I was just like, I'm usually opposed to trading holidays, but there's certain holidays where, if it's like not Thanksgiving, Christmas, New Year's, like one of the major ones, I might trade it. And I decided to take a position here. I thought we might get 2-to-1. Once we ended up pulling back and kind of sitting around like this for a while, I personally ended up pulling out at 1R, which was here. I pulled out here, and then basically the market just kept sitting around there. So it was on that push, I got out. I think some people stayed in, and heading into the next trading day, like heading into Asia and moving on, and like overnight, we can start to see how price ended up going for more than 2-to-1, ends up hitting that target. Again, I need to be exiting the market by market close, and it was a holiday as well, so I only took 1R there. Okay. So that was Tuesday. I know some people did hold overnight with CFDs and they were able to like catch the whole move. So cool on that. But yeah, that was Tuesday. Let me check the chat here real quick before we move into Wednesday. Okay, cool. No new questions. All right. So I'm gonna just exit out here and go to Wednesday. All right. So here we go. Wednesday. All right. Here we go. So this is Wednesday's price action. Got Asia high. Got Asia low. Okay. And yeah, let's look at the confirmations again. So you see it's a very systematic, repeatable process, right? Which is what we want to have as much as possible. This is what can help us with consistency. If we don't have a repeatable process, it's going to be really hard for us to find, again, consistency. So, all right. 10 a.m. open price was right here. And so let's look at what we got going on here. So 6 a.m. candle was a very strong bearish candle, as we can see here. Very strong bullish drop from 6 a.m. over here all the way down to 10. We saw this huge drop off, okay? So we have a very strong, bearish momentum currently. Second thing is we look at Asia. We did break Asia low right here. Third thing is the VWAP. So bearish, we break Asia, we're under the VWAP, and now we want to see price go against our analysis and then cross back below, and then we execute sells. That's it. So identify previous 4-hour window, bearish, we're breaking under Asia, we're under the VWAP, we allow price to pop up first, and then we wait for it to break and reverse, and then we jump in. So essentially we're looking at sells right here once price crosses back. Price is crossing up here. And then we finally get a nice candle coming right back down right there. And then essentially we have the movement. So as you can see on this day, we kind of topped out at around the 2-to-1 right here before we ended up coming back around. Me personally, on this specific day, I closed out like 1.7. This was a trickiest trade where when we were on the live session, we jumped in here. It ran for about a 1.5, came back to entry, came down to like a 1.8, 1.9, came back up. So like I ended up getting tagged out break even once here or twice. It was like once or twice here. And then I ended up getting in for one more time on this move. Price hit 2-to-1. I was like, oh, I'm gonna let it keep going, see if we can get more. And once it pulled back like this, I ended up leaving like right here, which was like a 1.7. And that was it for me on that specific move. So again, not every day it's gonna run for like a 4-to-1 or a 5-to-1 or a crazy risk to reward. But as long as we can get even a 1% winner off of it, you know, if you're managing it properly, there's nothing wrong with that. So 1R, 2R, like those type of days, they're not terrible. As long as we're managing it, that's what matters. All right. So that was Wednesday. All right. Now we'll look at Thursday. Let's try to speed run these last 2 days, and then we're good. But you can see again, it's the same process over and over. So you can never hold with futures past market close. I mean, if you look at a lot of the firms, for example, on futures, like they tell you have to close your position before market close. You know, it depends where you're trading at, but for the most part, yeah, you got to get out by market close. All right. Thursday. Okay, so Thursday, we got Asia low right here. And let's look. 6 a.m. candle was bearish. Second thing is we're below Asia. Right? We're below Asia. So 6 a.m. bearish, below Asia, below the VWAP. Okay. Now we look at 10 a.m. open price, which was right here. Okay. And what we want to see is price pop up above open price and then start to break and close back down and take sells off of that. Same exact method over and over. You saw buy examples, sell examples. As long as you're kind of rolling with the momentum of the previous 4-hour candle, that is what makes it very powerful because you're rolling with, again, higher time frame momentum is very, very powerful. You usually don't want to go against that. Hard to trade against that. So yeah. Oop. There we go. Price is popping up still. Now we start getting a downward movement. And here we go. Straight into profit right there. 2-to-1 risk to reward ratio is here, and then we see how price reacts at that point. So we kind of run straight through it. You can see how we hit 2-to-1, and that candle, as it hits 2-to-1, it also simultaneously hits 3-to-1. Like it went from 1.8 to 3 in one 5-minute candle. So there's no reason to freak out at a 2-to-1. If that candle is still pushing, you stay in. We hit 3-to-1. Now, once we hit 3-to-1, I'm definitely not trying to give back much more than that. If I can secure, 3% or more, that's even better. So kind of monitoring that, but usually we can get to like 4 on the really good setups. And so, yeah, we see a little bit of a reversal there. Price kind of taps around, and then we hit 4-to-1 there. Now this trade ends up actually running for even more. If we end up kind of just continuing to play it through, we can see that that position ends up running for like 7 plus R. So this is obviously like a superstar scenario where, again, all of the confirmations line up and we can squeeze a crazy R multiple off of the position. So you can see days where it runs for like 2R, maybe a little bit less, and turns around, and it's like a crappy day if it's a holiday, a slow day, whatever the case is. But if we have volatility and we have all the confirmations being followed, you will have some days, even if it's only 1 day a week or 2 days a week, that's plenty to have a monster. What I would say is a monster trade, given the stop loss size and all the stuff that we're using. Obviously, some people be doing like 10-to-1s, 20-to-1 risk to reward ratios on some of their models because they have very tight stop losses and whatnot. For me, like the way I trade, I just like using 30 to 50 point stop losses on ads with the way that I trade. And yeah, these are examples of really, really, really good trades here, in my opinion. So that was Thursday. We'll do one more day and then we'll just kind of wrap up things here. So Friday, check the chat here real quick. All right, so Friday, done. So this is Friday here. And Friday was funny because it looked like we were going to be bearish, and then literally like the last 15-20 minutes of that 6 to 10 window just completely flew to the upside and ended up closing bullish when it was all said and done. So it was like a candle that like basically until the last minutes it looked like it was going to be a bearish focused day, and it just like literally turned around towards the end of the candle. And that's why you can see it's like a little bit of a doji bullish candle that closed as. So it is a bullish candle, which means I do want to focus on buys. It makes sense too, because at the end of the day, we did have a big drop off, and then we saw that very intentional liquidity grab right there. And when you have price do a liquidity grab and just bring a bunch of volume the other direction, you got to kind of read the room that price is trying to reverse. I mean, it literally shows you here. We dropped off for a while, slowed down, faked one more move, and then just completely popped the other way. So that's why you can see this very long wick, and this candle is basically, again, this little move, and then price popped up. So that's how the 4-hour candle closed. So we are focused on buying for a bullish confirmations. Asia, we want to see price cross above Asia again. We want to see price cross the VWAP, which we're starting to see it cross above the VWAP. And then we want to see price just go against 10 a.m. and then popping back up above 10 a.m. 10 a.m. price was right there. All right, so that's 10 a.m. open price. Again, we want to see price pop up, drop, and then shift back up. And yeah, basically price, we see it drop there, start to cross back above. All right, and then we're jumping into these buys there. So you could even jump in at Asia. Like, you don't have to necessarily enter right at the 10 a.m. open price. When you practically do this strategy, like real-time practical execution, you're not always going to get the exact entry price. You know, you might be a little bit above. um that's just going to happen, right? But again, for me, the ultimate confirmation also is crossing Asia. So you could have even taken an entry here at Asia after price drops off. So really, this candle is what I liked a lot, is when price, you know, had this really strong bullish break above all of this noise that we got here. But it's no surprise that this happened, because once we tap around the Asia price and 10 a.m. price, it gets very sensitive and very indecisive when that happens. But that's why I like to wait for price to drop off first and then correct and pop back above. The way, you know, it's based off of PO3 or power of 3, where you're looking at a candle, like let's say a high time frame candle. So you can see these high time frame candles already here as an indicator. And we know that every candle has a body, it has a wick, right? And so if this is a 4-hour candle, what we want to do, if we think that candle's bullish, is we want to position ourselves at the open or somewhere below that down here, right? And waiting for price to reverse so that we can end up catching price pushing up. If we think that that is going to be a bullish candle after 4 hours, that first 15 minutes, 30 minutes, I mean, it depends how the day plays out. But we want to see us get in at the open or somewhere below that price to get in for buys, to then take it up and finish that candle being bullish. Okay, that's the idea. So when I say we wait for 10 a.m. open price to go against us, is to form that wick. Okay, so this wick at 10 a.m. is basically this movement down here. So we want to see price form something like that first and then end up making it up. So that's why this is the way it is, the way we do things. And just like I talked about on a previous day, whenever we have, you know, Asia that gets rated on one side, like, you know, the low, if we have the Asia high intact, we know that's a very strong liquidity target, like we saw from Tuesday, where it eventually should get hit, and that would push this trade to basically a 2-to-1 crossing right above it, which is where we want to be. And so price ends up, yeah, pretty simply smashing that. Obviously, if we want to go for a little bit more, you know, 3-to-1 plus, you know, that's our next target when that happens. We saw price end up hitting 3-to-1. Next target will be a 4-to-1. So this one did hit like pretty much beyond expectations for sure. Okay, this is where we ended up to now. So yeah, like I said, this one hit a little bit over 3R, and that was that. So that's the recap of the week. So we saw one day go for like 7R maxed out. This one went for about 3. All the other ones did at least 2R. But more than anything, even if you don't squeeze necessarily a huge RR, the win rate is very high because you're following a very specific list of high time frame confirmations that make a big difference. All right. So that was it. That was it. We'll see what this week brings. Obviously, this strategy is very contingent on waiting until the time of that 4-hour candle. You know, we have to allow 6 to 10 a.m. to form for us to even have the criteria to take a trade. But in general, you know, I'm looking at higher time frame idea, you know, of where we should go, just to kind of understand where we're at in price. I will say, if we look at something like the weekly time frame, we saw that we did finish the last 2 weeks bearish. So I personally do expect another bearish week. We might pop up first, you know, which I invite. I actually want price to pop up as much as it wants. What we really want to see is the previous week's wick get respected. So for example, previous week, it was kind of a doji candle, meaning it had a big wick on both sides and a very small body. But basically from the open of last week, which was here, all the way to the high of last week, so from open to the high, that is really like the zone which is a very wide zone. Obviously, I mean, we're looking at a weekly candle here. This is like 6,000 pips or 600 points, right? So that's very wide. But in general, basically all of this zone right here, okay, all of this zone right here, I want to see us basically halt somewhere along here. And it could be literally here, it could be somewhere in here, it could even be all the way up here. But somewhere along the line, we want to see price kind of just respect this and start to show price coming back down, okay? Because if we're coming off of a bearish week, and not just one bearish week, but again, back-to-back bearish weeks, there's just a lot more momentum headed that way than the other way around. So I do expect maybe early on in the week to pop up, but the rest of the week kind of coming back down, which means that we should take out last week's low, which was Friday's low. Because the low of the week was, it just happened to be on the last day of the week, which is here. So this low should be the first target to look at, you know, if we get reactions from here for us to take this out. And then we actually have a very interesting inefficiency that the market has left behind a while back that you can also see on the weekly if we zoom out, which is this flat bottom candle. So these flat tops and flat bottom candles are like a form of inefficiency. A healthy candle should be a body with a wick to the downside and a wick to the upside. All right. If we have a candle, for example, that forms and you know, it has like a wick to the what? That is so dumb. All right. Yeah. If we have a candle like this, okay, and we have a wick to the upside like this, and we don't have a wick to the downside, like we just have like a flat bottom candle like this, it could even be a flat top, whatever, that is not really efficient price action. Usually that happens because maybe it was like a Sunday open, like a new week open gap or something that was created, something that left like a gap or something. And that is a form of price inefficiency that at some point we expect price to end up running down to hit that. That's on all time frames, but especially if you have that like on a higher time frame, like a daily, weekly, 4 hour, something like that, you know, that's very important. That like that stands out a lot to me. And it's not something that has to necessarily be rebalanced or fixed right away, because as you can see, it's been weeks. You know, this was formed on the 13th of October. You know, we had literally the week of October 20th, the 27th, November 3rd, November 10th. Now this is the week of November 17th. So it's been many weeks already. It's been like what, like a month, over a month, right? But again, if we look at that inefficiency, it is very important, which is basically this low, this flat bottom candle right here. And this is a Sunday candle, as you can see, right? This is why I was saying it's a new week open gap, most likely. So this is Sunday at 6 p.m. where we formed that. And we came very close to it like twice. Literally price came here, but we never actually saw price take out that inefficiency. So just something that's been left behind. Now, so I noticed that some people's brokers or whatever, this piece of price action from like September 24th to October 17th, this is gonna look different for some of you guys. So I'm gonna show you why. If I pull up like a side by side here, we're gonna look at NAS 100 and we're gonna look at NQ, which is like the futures version, right? NQ. Okay, if we look at NQ 4 hour time frame and we zoom it out. Okay, so this is what I'm talking about right here. So if you look at this chart, you can see that these are like lows that kind of like form like equal lows here, right? But on this chart, you can see that this price here actually like wicked below. You can see how price kind of like dipped here, right? Notice how that didn't happen here. That's why I say this is an inefficiency, because there's like contradicting data happening here. Okay, so this is like the actual CME like futures data feed that shows the price at new week open, like liquidated all those lower positions here. But on like, NAS 100, like the replicated stuff, you see it didn't really do that, and it leaves that flat bottom right there. So that's the thing. That's how you know it's an inefficiency. Like different charts are showing something different. So that's not gonna stay like that. Like that's why I'm saying price is gonna eventually run through like all of this. Price will just run through all of that, and just clean all that out basically. So that's why I say like, oh well, what's the point of talking about this? Well, it supports more my bearish bias and a target to hit with the bearish bias. So obviously, when the day comes, whether it's Monday, Tuesday, if we have a 6 a.m. candle that's bullish, I'm gonna go for the buys. You get me? Like I'm gonna follow the strategy, but I know that in the back of my head, this is a very important area for us to get to from a big picture perspective. And so if I know that, and I also know that we have back-to-back bearish weeks, I already have the higher time frame idea of selling, and then we have a target to hit with that idea. So there should be no hesitation or fear for going for sells. If the strategy is confirming it, we have multiple weeks of bearish price action and a clear target. Like we should just be able to green light sells. No problem. And I also know if we have bullish days, like that specific day may be a bullish day, that we can take that trade, but we might not be able to get a 5-to-1, 7-to-1 risk to reward trade. We might be, capped out at 2-to-1s, 1-to-1s, maybe less than a 4 or 3-to-1, because eventually I expect the overall momentum to be bearish. So we might have confirmations for buys, but I don't think I'd be able to swing those or like really squeeze them as much as the sells. Like if we have confirmations for sells, I feel like we should be able to bag 1 or 2 trades this week that do 3R, 4R or more, with the whole narrative and everything that we have kind of mind. So that's it. This makes Liberty even stronger 100%. What makes you use VWAP? Well, I mean, in general, VWAP is just a really good tool to like get an average. It's an average price, right? So it's really like making crystal clear to me like whether price is respecting a trend, holding a trend, etc. So if you notice, like when we had the VWAP on Friday's example, price was like very easily staying under the VWAP during all of this drop. So if you're trading regular Liberty, for example, this is probably even gonna help you as like just trading the OG strategy I've always taught with just implementing Asia. You can see like if you're trading Liberty, OG Liberty, and you see that we're under a VWAP on multiple time frames, what does that tell you? It tells you that, let's say you were trading London, right? And you had this scenario here where price dips, comes back up, dips, and comes back up. People that have been learning that with me will probably think, oh, this is going to be a reversal model, because price took out the low and now it's shifting structure. But if you look at the average price, you can still see VWAP is still very like it's a form of resistance, right? So you might save yourself from a stop loss, not thinking that this is a reversal back to the upside, because the VWAP is still very strongly against you. So I think that's just a tool for me to know whether something is going to be a fake out or not, I guess you could say. So when I see, for example, us looking at this strategy that I've been talking about for Friday, this is why it's a big confirmation, because notice how the VWAP was really resistant for a while, but we are able to manage to cross it and stay above it especially when we hit this specific candle, this solidifies the shift, because again, VWAP was resisting. We started seeing it dance around it, and then finally we get a very strong candle that just breaks above it, breaks above Asia, and just follows all the other confirmations. So again, even VWAP for like regular Liberty can be a very useful tool if you're kind of scared of price pulling against you, pulling against you, pulling against you, maybe for sells, but like, hey, even though it's pulling against me right now for sells, let me hold strong because the VWAP is still, on my side right now. So it's just a good tool to kind of really see a trend shift or a trend continuation, how strong it is or whatever. When you go break even, when do you go break even or take partials, or do you close the full trade at a minimum 2-to-1 with trading stops? I prefer to let it get to 2-to-1 as much as possible. The one exception that I had was on Veterans Day because I knew it was a holiday and I saw price kind of running out of gas. So that's a little bit of like experience and intuition. And I could have gotten the call wrong. Like it could have actually kept going and I would have been pissed that I closed early, So I'm gonna get it wrong sometimes and close early, and I'm gonna feel stupid. It is what it is. That's always gonna happen, forever. I can get better at experience and intuition and letting trades run longer, but for the most part, here's the thing: if you have data, like if you just go through what I showed you this last week and you look at 2 weeks ago, 3 weeks ago, a month ago, 2 months ago, when all the confirmations are there, it should run for more than 2R all the time. If it doesn't, that's more of the outlier. Like like if all the confirmations are there and you follow it, it should run for more than 2R. So I'm not so worried about going break even right away or anything like that until I hit 2R. The good rule of thumb is if we're pushing like 1R plus, that's when I at least start to monitor it. Because like I said, on Wednesday, it was a situation where I hit break even twice and I still re-entered a third time. And in reality, I would have been in the same position if I would have just never moved break even in the first place and let it keep going to 2-to-1. So it really depends, man. I mean, market conditions obviously change where, price slows down a little bit and it chops in and out more. If it's very trendy, you usually don't have to worry so much about managing the trade so closely. So I know sometimes people want to hear like an exact rule for absolutely every single detail of a trading system. But dude, if we could do that, we'd have an EA. And I've never seen an EA or like an algo that people have that is like just prints money and never loses and is always running perfect. It's never existed. So I will always say that a good trader and a good trade, like every good trader, even I study that does better than me, has some things that are mechanical and some things are discretionary. When you lean all the way to the mechanical side, you're using an algorithm. When you lean all the way to discretionary, you're just like getting lucky, you're guessing, right? So it's like that's the spectrum of guessing and then having an exact mathematical system that you just literally program into a computer. Trading is like finding the middle ground where you create mechanical or robot-like rules and things that need to happen, but then also using judgment calls, intuition, experience, and it's a vibe. Like it's crazy. It sounds funny, but you can ask anybody that's done this for a long time that does well. It's a mix, right? And so trade management, I can always tell somebody, yeah, after 1-to-1, move stop loss to break even, but not every day that's going to be the right call. If you want to trade more safe, more conservative, and be careful, you can do that. Just know there's going to be days where you do get tagged out break even, that price ends up running, and I'm probably going to make money on those days, and you're not. And there's going to be other days where maybe I should have gone break even, I didn't, I take a L, and you end up saving yourself from an L. But when you look at the next month, 2 months, 6 months, a year, which one of those is going to end up being the better choice? I'm going to always just tell you, like, if our confirmations are there, your trade should respect the stop loss and run to at least 2+R most times. you know? So look at it that way. But if I'm not closing at least 2R plus on my setups on average, it's gonna be hard for me to be profitable. You know, there are people that have 1R systems where they're not looking for anything more than 1-to-1s, but their win rate is very, very high all the time, like 70%, 80%. You know, that's the way you make that work. And this week, the win rate was crazy. Other weeks, it may not be so high. So if we even just try to focus on sticking to like 50, 60% win rate with 2-to-1s, like just look at the math. It's going to work, you know? And that's just me being more like not expecting so much out of a strategy. Like 2-to-1s, 50% of the time, we're good. You know, that's what everybody should strive for all the time. Like once you get there and you make that your minimums, then wow, you're doing great. But at least try to get there, you know? Because somebody will see this situation hypothetically and think, oh, this is easy. 5 out of 10 trades, 5 out of 10 win rate, right, is 50%. And your average risk to reward is 2-to-1. Which means if you're risking, you know, you're risking 1%, you have minus 5% losses and plus 10% wins. That's net total of plus 5%. And if you compound that through having multiple funded accounts and all that stuff, that little 5% is actually a big number when you have enough capital, you know, and allocation and scalability and all that stuff. So if you can't like do, at least try to do this, you know, and it could literally, these numbers will be different because you're gonna have some break-even trades, you know. You're gonna have some trades that run for more than 2R, and you're gonna have some trades that run for less than 2R. So even this framework is unrealistic in the sense of doing that perfectly all the time, every single 10 trades. It won't really be like that. You know, you'll have some plus 1%, some break evens. You know, you lose, and then plus 2, and then minus 1, and then plus 3, and then you lose 2, and then you have 3 break evens in a row. You know, like that's the realistic way that can happen. But again, you just want to try to have an average framework that you're trying to like balance and stay within and keep in mind. That's why, you know, any big trader, I saw, I'm not gonna name drop. I saw a trader that he lost like 1.4 mil, you know, in a month. And it's like, well, for their career, they've touched 8 figures, you know. But somebody will see like, damn, you had a negative 7-figure month, you know, and especially when you're in this space, like I'm an educator, right, for a platform. And I send out alerts and trades, right? Imagine if I only lost for a whole month. What do you think would happen? You know what I mean? Like most, especially newer people, which I get it, they don't know, you know. But a lot of people will see that and be like, "Oh, red month, you don't know what you're doing. You must not know how to trade," or "Oh, there's something wrong with you." But there's a lot of traders that have a red month. You know, it's whether these people are career traders or not. You know, if you are doing this for 5 years, 10 years, in retrospect, like what's 2 red months out of a whole year? 3 red months out of a whole year, for example. Um, so take that into account. But people that are looking at it from a very short term perspective, it's like, oh, if I have one red day, it's a problem. It's like, nah. You're gonna have a red day, you're gonna have a red week, you're gonna have a red month. It's really about what happens over the course of every quarter, 6 months, a year. Depends how long of a game you're trying to play here, you know? So just consider those things as well. But again, with this strategy, if you follow it properly, I mean, we're going to continue to document and you're going to see. But so far, so good. That's all I'll say. Do you recommend bigger stop loss sometimes or stick with 50? I saw you used 100 on Friday. Nah, I didn't use 100 on Friday. I don't know what made you say I was using 100 on Friday. The only thing I might have said, like on the chat, maybe I was like, oh, if you guys wanted to cover the low and really be safe, which I didn't do that personally, but I was like, if you really wanted to be safe with this specific entry, sorry, like you let it cross above Asia, you could have covered the low down here and it would have been 100 points, for example, like this. Like this is probably what you're referring to, because this covers like all of these lows down here. But I always usually say that I personally don't want to do that most times, like ever, because it chops my risk to reward pretty bad. You know? Um like this is like a one. Did I say that earlier? Did I say that did I do this in the example earlier? I don't think I did that. Did I put 100 here? Now that you say that, I think I put 100 here. Why did I do that? I might be tripping right now. But I know I did say, look, I might even pull up receipts here, huh? I don't know if I said it. Yeah, you see, like even in this screenshot, I didn't even have the 100 points right there. I think I said it now while I was talking to y'all. I probably had this dragged out like this, and I didn't notice that I had 100 points there. That makes sense. I think I did say that. But nah, definitely. I'm definitely lying right there. This is really the way the setup is supposed to be right here. So that's me. Yeah, no, you're right. Now that, because I remember putting this here and it was like 1.8, and I'm like, that doesn't look right. But yes, this is usually 50 points. The only reason why I would tell you to do more than 50 points is you got to look at how big is like the Asian range that day, for example. Like how much volatility do we see on a given day? Like for example, this range was about 180 points, which is pretty wide in general. Usually like the average Asian range that we're looking to like that we usually see is less than 100 points. You know, usually our Asian ranges are like, you know, between 600 to 100 points. This one was 110. Sorry. This one was about 180. So the last couple days have been a little bit more wide. More typical conditions are like, for example, this week where you had this range was about 70 points. This one was about 110. This one was about like 46 points. This one was 64 points. So it depends. Some Asian ranges are going to be less than 100 points, right? Once the Asian ranges start touching like more than 100 points wide, it's where you might consider using a bigger stop loss. But in general, and this is the thing I always tell people, like take initiative with whatever you're going to trade. So if you're like, oh, I'm on this live, I like Rich's strategy, I'm going to see if I start implementing that. Go back and look at these confirmations and look at the last month, 2 months, 3 months. Like go not just 1 week or 2 weeks, like actually take the time to back test multiple months and look at, hey, how does this perform with a 50-point stop? How does this perform with a 30-point stop? How does it perform with an 80-point stop? And you'll find that common ground between a safe size stop loss where we get like enough room for the trade to quote unquote breathe, and then also still get risk to rewards that for you are worth it. So for me, with this entry criteria, if I can use a 50-point stop and bag 2-to-1 plus risk to reward ratios, for me, that's good. For other people, it may not be enough. For other people, they want to play it even safer and use a bigger stop, whatever. But I think in most cases, a 50-point stop targeting 2-to-1 minimums does well so far. and we can always have to adjust that. Like when it's tariff season with Trump talking about tariffs and all that stuff, I've had to use like 100-point stops more frequently because it just looked like 50 points was nothing on the chart, so I had to adjust. Because ultimately, if you know you have an Asian range that's like 200-300 points wide, then your New York session is gonna be like 600, 800 points, 1,000 points wide. You know, and it's like, damn, if as long as the risk to rewards are there, that's all that matters. So just always think about that as well. But for the most part, 50 is enough in most situations. Do you use FVGs as TP sometimes? Yeah. I like using FVGs and session based liquidity for entries, exits, everything. Like it's part of what I look for in general. So again, like in this situation, the target was session based liquidity with the buys here, right? But you know, other days I think like what day was it? Oh, it was like the days of Wednesday. So Wednesday's sell-offs, let me just take this off. Like Wednesday's sell-offs, we had two major fair value gaps that we were talking about. We had this one. I could probably make. Okay, yeah, you can see it better here now. Okay, so we had like this one, and then we had this one. Okay, so we had two major high time frame fair value gaps here and here. So when we were up here in price already, these were like targets that I wanted to hit for sells. And then from there, you just use the actual strategy for your entry criteria, and it just gives reason for the trade, you know? So if you guys recall, again, for the strategy, we ended up jumping into sells here. And yeah, this was the same, the exact strategy that we looked for on Thursday. And we could see that, you know, 50-point stop. And then if you look at this fair value gap down here, it happens to hit right at that like 4-to-1 risk to reward ratio target, which makes sense. So at first we dropped into this one. I can delete this one already. But then we had this one down here that is still not hit. So yeah, fair value gaps give me more confidence and reassurance, and they are used as a good target, which is why price like hits it and then it kind of like bounces off of it a little bit at first and gives a reaction. Ultimately it runs through, but you know, for a little while we saw price kind of like sit at that fair value gap and kind of like respect it. So yeah, it's definitely part of the repertoire 100%. I'm just not even really looking at it during this like recap with you guys of the last week's trades because we take even freaking longer showing everything. But yeah, like in the moment, for sure, it's something that we always look for, you know, on higher, especially on higher time frames, to just kind of make sure we know where we're at and where to target. But yeah, that's kind of it, guys. We've actually been on here for quite a while. I usually don't run these long on Sundays, but a lot of good info, and yeah, I think we have a good idea of what we're looking for the week. Again, personally, like last Friday ended up as a bullish day, so we should see, at least at the beginning, price kind of run up the previous day high before we look at anything to sell or short from. So like the high from Friday was here. So I think it's a high probability that we run that high first. Maybe now during Asia, maybe during London. So we should take out Friday's high. But overall, this whole zone, I'm expecting us to kind of like end up turning around like this. Just because we're off of back-to-back bearish weeks. So the daily candle was bullish, which means that this day should kind of follow suit and push bullish. But the week was bearish, so this whole week in general should be bearish, meaning we should get a pop up and then end up a pop down. So sells for me should be like the main priority this week overall, unless we get some further development that changes my mind. But as of right now, I don't think so. All right. So yeah, once we take out Monday's high or Friday's high, we can get any confirmations for sells. I would love to take sells, and we take out this low. All right. So I'm gonna leave you with that. Hope you guys have an amazing rest of your Sunday. I will see you guys in Akashex tomorrow in Spanish, where I do my live session at 11 a.m. Eastern. If you are bilingual, if not, you guys can still watch the charts. But I do my English sessions Tuesday, Wednesday, Thursdays at 10 a.m. Eastern, and take it from there. So that's it, guys. Appreciate y'all. Hope you have an amazing rest of your night. And I hope that this kind of give you guys some better clarity about how the strategy works, what we're looking for, and how to, make the most out of this next week. So I know some of you guys were asking about the links in the chat and all that stuff. So just shoot me a message. I dropped my Telegram username up top a little bit here on the chat, and just let me know. All right, y'all.